Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin post-FOMC. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So Bitcoin is still doing what it needs to do, right? It's still holding above the bull market support band. Remember, that's the big test for September, is to just hold that 20-week SMA. Now, the thing to consider here is that we are following a very similar pattern that we've seen basically every market cycle. And I think it would be prudent to not forget what that pattern is. And we can go through it. And I mean, obviously, it's always easy to assign narratives to things. But the reality is that Bitcoin, usually finds some type of a low in the summer, right? Some type of a low. It rallies, puts in a high sometime in Q3, and then you normally find a low sometime in September, okay? Same idea, right? You get your high in August, you get your low in September. Same thing in 2017. You get a high in August, you find a low in September at that 20-week SMA, and then you go up and you put in your market cycle top. Same thing happened in 2013 as well, right? A high here, a low there, right? You also have your summer low. 2017, this was your summer low. So you can see the pattern. You have a summer low, you rally into kind of the Q3 time frame, put in a local top, go down, put in a low in September, and then go up into the market cycle top. Now, a lot of people are losing patience, obviously, because, well, Bitcoin's still sitting below the prior all-time highs. But it would be important to remember that a lot of these breakouts, historically, that have happened to new all-time highs, have historically not happened until the month of October, right? So if you look at a lot of these different moves, or at least the high that's put in like August or September, it's usually not taken out until the month of October. And so, it might be reasonable, honestly, it might be reasonable to just say, you know what? So far, so good, right? Bitcoin is it's got a nice bounce off that 20-week SMA. We're not even having to worry about the 50-week SMA yet. That's a good thing. So what I could see happening is kind of a repeat of last year, actually. I mean, a lot of things just continue to play out in basically the same way. But what happened last year when the Fed cut rates, they also cut around the same time. And Bitcoin had 3 green weeks, right? 3 green weeks. And that's kind of what we just got right here. And it was, sometime around this point over here where the Fed cut rates, sometime like mid-September. There was one back test of the 20-week SMA, but back then it had to do work just to get back above it. But then ultimately, the highs broke, but not until later on, October, November timeframe, right? I think technically it was actually early November last year when Bitcoin had enough strength to actually break out. But back then we were under a much more significant, like lower high structure. This one doesn't seem as significant, and it's really not even a lower high structure. Right? If anything, it's higher highs. So what I'm thinking, perhaps, is if it's not broke, don't fix it. What if the path is just simply, you have this move, you get a slight pullback off the all-time highs. Maybe it goes to 119, 118, 120, who knows, right? You get a slight pullback off of it, perhaps into late September, early October, kind of like last year, and then you get the rally into whatever the market cycle top is going to be. Now, who knows when that's going to happen? I mean, obviously, you could speculate it's going to happen anytime from October until December. If you measure it from the low, it would suggest October. If you look at structurally compared to the 2016-2017 cycle, November is also an option. But I think it makes sense to start thinking about it once we get to the month of October, right? Start thinking about it. And here's what I'll say. No matter what happens, at any moment in the next, let's call it 6 months, if we get weekly closes below the 50-week, cycle's probably over, okay? As long as we're above that, things are still fine. Note that it's weekly closes below that have historically ended all prior market cycles. Now that is currently at 98K. So as long as that keeps trending higher, we're in good shape, right? We're in good shape. As long as what I mean to say is we're in good shape as long as we're getting weekly closes above that level. So watch for it to play out potentially like last year, where it gets a nice move, it rallies for a little bit after the rate cut. You get a slight pullback in late September, early October, and then you get a move to try to take out these prior all-time highs sometime, hopefully in October. Now, you might say, what's the narrative to cause, a delayed, a delayed sort of a delay on hitting a new all-time high? Like, why can't Bitcoin hit a new all-time high in September? Well, I mean, it could, right? Nothing's impossible. But I think the argument, right? The argument for what it could be the same things for the S&P 500, where it is getting kind of extended. And a lot of times you'll see the S&P get a slight pullback in that late September, early October timeframe. We actually saw the same thing in the post-halving year last cycle. We found a low sort of late September, early October. And one of the things you can look at for stocks, if you go to just say like the year-to-date ROI, and you go over here to indices, and we look at the S&P 500, what we're going to do is we're actually going to just look at this year, and we're going to compare it to the average of all prior post-election years. And if you look at that, you can see that we are kind of extended well above the normal average. And historically, and let me just hide the current year, but historically you see a little bit of a pullback in like that late September, early October. Not like a massive pullback. Like, I'm not saying you're it's going to drop 20%, but I could see like, a very slight, maybe like 5%, 6% pullback for the S&P late September, early October timeframe, just to kind of check back in a little bit, right? Just to confirm, and then maybe hopefully get another move up, kind of like last cycle, right? Kind of like last cycle. It could play out like that. So that's what I'm looking for. If the S&P gets too heated and doesn't get that correction, well, then maybe we're just in the, sort of in that final move into a market cycle top. But if you can see the S&P cool off a little bit, late September, early October, it could be, the narrative could be whatever the narrative is going to be, but the reality is the S&P often finds a reason to cool off, and then it starts to then pick back up as you get out in sort of like mid-October timeframe. So if Bitcoin is unable to put in an all-time high in September, you could probably blame it on the stock market. What does the stock market have to blame it on? Perhaps just general seasonality. But the reality is the stock market's been running hot for a while, so it wouldn't be that crazy to just get a slight pullback late September, early October. So the Fed did cut 25 basis points, which was always the most likely outcome. Quantitative tightening continues. It looks like they're likely going to be cutting again. So if you look at expectations here, it looks like there's like almost 92% chance the Fed's going to cut again in late October, and then again in mid-December. Now, one thing to keep in mind here is that the Fed funds rate, if you look here at interest rates, we're now at 4.25, right? 4.25%. And the 2-year yield, which, is an approximation of the neutral rate, the 2-year yield is now at 3.5%. So there's about a 75 basis point delta between the 2-year, the neutral rate, theoretical neutral rate, and actually the Fed funds rate. So, but also note that the 2-year yield is at this kind of like long-term support level, and it actually also bounced last September when the Fed cut rates, a larger bounce, but perhaps it'll bounce again, but just a smaller bounce, and then it potentially breaks down, something like that. And if it can do that, right, if it can get sort of a final bounce, then it could allow, Bitcoin to get that final move into a market cycle top. If it doesn't get that final bounce, then, things could end obviously sooner. But hopefully we see it, hopefully we see the 2-year bounce. But the point is if the 2-year does bounce, let's say it just bounces back up to the 20-week SMA, that could be around that 3.75% level. Well, remember, the Fed funds rate is projected to be 3.75% by December. So, what are the chances that, they basically cut and they get interest rates back to the neutral rate, and then that ends up being like the market cycle top, right? And people would be celebrating that, but then the problem with the Fed funds rate getting back to the neutral rate is that it means that they can't continue to aggressively cut if the economy is not falling apart, right? The only reason they should aggressively cut is if layoffs are picking up. We're not really seeing that yet, right? We got initial claims in this week, and we're back down to like, 230K after that surge we saw last week to 263. So, if the economy's not falling apart and they're cutting rates, there's only one direction for the long end of the yield curve to go, and that's up. And so watch for that 10-year yield to start heading higher here, just like it found a low back over here in September. Also watch for the dollar to find this low. Like, that could easily be a low for the dollar for a while. And then by association, if the long end's going up, if the dollar's going up, then you guessed it, Bitcoin dominance should also start to head up late September, and especially as we get into the month of October. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.